Joining me now is Richard Carleton. He's the CEO of the CSE. Great to see you again.
Thanks again, Mark.
So let's start out by asking about emerging competitors, let's call them, and some not emerging. Some have been around for a while. How is the CSE differentiating itself, and how is it that you're getting the vast majority of new listings for mining?
Yeah, I think there's really a couple of things that make the CSE a very attractive venue for mining exploration companies in particular. And that is, in one hand, the price point is very attractive to companies at that stage of development. But I think the more important consideration for management teams and shareholders is the capability of our regulation services team. And so that we have a good reputation amongst the entrepreneurial community, the law firms, the audit firms, and the investment bankers for moving those files along with speed, with constructive work with the teams to solve the problems that come up. And I think generally providing significantly lower risk as they move through the listing process for the first time. And I think one of the objectives that we have is obviously to continue to cultivate those relationships, because as you know, many of these mining entrepreneurs have many projects. The one that's going public is only the most mature of 3 or 4. So having built those relationships, we tend to get the follow-on projects as they hit the stage when they start to go public. So as you point out, we've been very successful in the mining space over the last 12 months. Roughly 80 companies or so have joined the exchange from the mining sector. 22 in the first quarter of 2023. And we have pretty good visibility into the pipeline about 4 to 6 months from now. And it looks like, again, each of the next 2 quarters will be somewhere between 20 and 25 mining companies again. So there's a possibility that we'll get as many as 100 mining companies on the CSE in 2023, but certainly far and away the largest contributor to our new issuer population from the mining sector.
And how have critical minerals changed the landscape for you over the last, say, 5 or 7 years in terms of new listings and how much money these companies are raising? Yeah,
that's a great point. There's been a remarkable shift in the focus of the companies that are looking for minerals. So traditionally, the precious metals group has been the driver of the bus, if you will. But beginning about a year and a half ago, we began to see a lot of investment in the nickel, copper, zinc, cobalt, lithium, graphite, and rare earth space really across the board. And so in addition to, of course, continued investment in the precious metal space. So it is a very broad portfolio of minerals that the companies, in fact, are looking for and looking to advance those projects.
And then, Richard, can you speak to the liquidity in general and on your exchange compared to, say, a few years ago, and what are the dynamics of that right now?
Well, it's really true across the investing landscape in North America and Western Europe that 2021 was the high water mark for turnover rates, liquidity, however you choose to measure it. And in particular, retail traders were very prominent in the markets. And beginning with the increase in interest rates, again, across the major economies in North America and Western Europe, you began to see a significant reduction in activity levels from the retail investors. And so we're trading at about 2017 levels at this point, which is not out of keeping with our peers in the markets. And I think, as we talked earlier, it's a bit of a frustration point for the management teams, because as they advance these projects, and again, in particular of the strategic minerals focused companies, in many cases they're drilling historic properties. And so they have a pretty high confidence level that there will be positive results, and they in fact have been generating positive results without a lot of impact in the market. And so as they raise more funds to advance those projects, sometimes they're not getting the asset valuation that they would like to and expect given the results that they've had. So we're working with the management teams to help come up with different ways to expand their shareholder base, to give them a broader audience, to raise capital and to provide secondary market trading. And so later this afternoon, we'll be talking with our friends from the OTC Markets group in the United States. And again, that's how our issuers can attract or work with shareholders and investors in the United States at a very low cost and with a very efficient market structure underlying it.
Yeah, flesh that out. You're speaking on this panel about over-the-counter markets in the U.S. and the importance of them. So how many of your, I don't need a hard number, but how many of your mining companies are dual listed, and what are the overall benefits for them?
Well, it's actually not a listing. You're traded over the counter in the United States. Right. And the answer is basically all of them. Some of them choose to be present on the so-called regulated boards, the QX and the QB. And again, it's the majority of them, probably a couple of hundred out of the 320 or 340 or so mining companies we have listed on the exchange now. And what that does is it means that there is secondary market trading in US dollars on a regulated market that's accessible by investors from Robinhood and Schwab and Fidelity and all of the discount brokers, as well as the major full-service brokers in the United States. And the same market makers who are making those markets here are also present on the CSE. And so that has the effect of actually deepening the book in both markets. Cross-border arbitrage also, and I realize I'm getting into a bit of inside baseball here, but cross-border arbitrage is good because it means that the price in Canada and the United States is the same, because if it isn't, they will come in and ensure that, in fact, those prices are level. They will take advantage of any differences in that price. So what that does is it really enhances the pool of liquidity on both sides of the border. And again, for companies, it means that they have the opportunity to do private placements in the United States without having to become SEC reporting issuers. They can build a following in the United States, analyst coverage, broaden the mind share in the investment community through a quotation and secondary market trading in the United States. It's a phenomenal vehicle for these companies to pursue.
And a really nice insight into some of the plumbing that maybe investors don't see all the time. Thanks, Richard.
No problem.
Great stuff. Richard Carleton, he is the CEO of the CSE.